And now here is the registered silver supplies on the COMEX. We see here that we have had another fall this week down to 33.2 million, which is a low for this cycle starting at Silver Squeeze. And we've had a little bit of a hiatus here as the registered supply started to stabilize around November, around when silver bottomed. But now it appears possibly that the drain is continuing. We've gone from about 38 million to 33 million in the past 2 weeks. Let's see if we can keep falling. We're seeing the same thing on the LBMA. Here is the gold supplies. This came out earlier this week on January 5th, I believe, or January 8th, whatever it was. And we see that the gold supplies are still falling slightly. I think they were down another 1.2% or so. And the silver supplies are still at an all-time low. And they rose, I think, 0.07% by a few 100,000 ounces. But it really was nothing in the context of what's been going on. So as silver has bottomed out, the spot price has bottomed out, we would expect that the LBMA supplies would rise, but they haven't, and we'll see what happens as silver keeps rising. Now I want to move to Japan. Japan is important because it is a humongous debtor, and it will be a key domino that falls in the debt collapse of the entire monetary pyramid. So we see here that Japan made big waves when the Bank of Japan decided to raise interest rates on its yield curve control policy to 50 basis points from 25 basis points, and that was a big surprise for everyone. Bank of Japan backing off its humongous money printing, gargantuan money printing, world record setting money printing that it has been doing. It has been the biggest money printer of the world, way more aggressive than the Fed, and that ceiling was established at 50 basis points over here, and gold and silver responded very well to that. And now we're seeing up here that the new ceiling at 50 basis points is being challenged again. How long is that ceiling going to have to be challenged before the Bank of Japan backs off again? And why would they back off? Because if they try to maintain that ceiling for too long, they're going to have to keep buying and buying bonds until they own the entire bond market, which is what was happening over here. They were buying record amounts of bonds to maintain the 25 basis point ceiling. And now you see that how long did this ceiling last as the market was hitting up against it? From around September to the end of 2022, so about 3 months, a little less than 3 months. How long is it going to take for the 50 basis point ceiling to be smashed up against until the Bank of Japan backs off again and precious metals move higher? Well, here's a zoom in. The 50 basis point ceiling has been challenged since January 6th, pretty much constantly. Here's that line. We're now at 0.511 basis points, so we're already over, and this is January 11th, so who knows what happens today by the time you're watching this. But my assumption is that if this ceiling gets hit for about 2 or 3 months, maybe even less, then the Bank of Japan is going to have to move again. There's going to be serious monetary earthquakes. Exactly where they're going to extend to, we'll have to see. And now, this final chart I've shown before, but I want to give a different perspective on it slightly. This is silver versus stocks. So I understand that silver versus stocks has been in a bear market since 2011. I get that. We all know that. That is not to be denied. However, if you look from the beginning of the gold and silver bull market in 2000, 2001, this means that physical silver has outpaced stocks, outpaced the NASDAQ, outpaced all those bubbles since 2000, because we're still decidedly higher than we were back in the low. Now, I'm not trying to give an apology or an apologetic, polemic rant on why silver is better than stocks because, at least since 2000, I'm not trying to say that. What I'm saying here is that when you have physical money, physical silver in your possession versus stocks, the people that own stocks, and let's say they've owned stocks since, let's say the silver top, and they're doing so well, etc., and they're outpacing silver holders by so much, and they're partying, and all the silver bugs are like, oh my God, why did I do that? Well, what do they really have? The question at the top of this chart says silver versus stocks. Where are the dollars that stock portfolios represent? So when you're up in stocks and you have all these stocks in your portfolio and you're doing so well, where are the dollars that those stocks represent? Do they even exist? And the answer is no, they don't, because when people cash out, that is when the stock prices fall. And so the number that you see on the portfolio, if you own these bubble stocks, is an inflated number. Whereas when you have physical silver and it's still outperforming stocks since 2000, 2001, where is the actual money that you own? It is real. Everything that you own is actually real, whereas most of the value that these stock owners silver minimalists, we could call them, own doesn't even exist. And despite the fact that precious metals owners, particularly silver owners, actually have in their possession the physical money, and equity owners actually own very little of that because it's all fractional reserve, despite that, silver is still outperforming stocks since 2000. And now as equities continue to evaporate because we're still in a deflation that is caused by the rising interest rates, in a monetary sense, even though consumer prices are still rising, obviously, physical silver will outperform equities much faster. And this bear market that we've been in since 2011 will end if it hasn't ended already. And there is one hint that it has ended. We have here since 2018 these three little circles. This is a triple bottom that has a marginal break to the downside. When triple bottoms break, they usually break hard because you have a lot of shorts that pile in at these areas, but they haven't. You see a marginal break here in 2022, September 2022. This was when silver bottomed and has been going up ever since, and now is above the 200-week moving average, that red line, which during a bear market you almost never see going up, except for here, which was the COVID printing craziness over here. Here we have, again, a triple bottom, marginally broken, which means it's probably not going to go any lower. And this bear market since 2011, which turned out to be an 11-year bull market, appears to be over. And the last thing I want to cover today is the Swiss National Bank. The central bank of Switzerland reports a $143 billion loss, its largest ever. First paragraph here, the Swiss National Bank said Monday it was anticipating a $143 billion loss for 2022, the steepest loss in the bank's 116-year history. All central banks are losing money, almost all the consequential ones, all the big ones are losing money big. And when central banks lose money, their units of liability crash. And you see eventually hyperinflation as the only way that they can stop their losses is through printing, and losses by central banks mean the loss of purchasing power by the people who use their units of liability as a medium of exchange.